Good morning and welcome to the Recovery Report Live. I am standing in today for Mr. Daniel B. Odess, who is out of the office this week. My name is Matt Sengsourinh, Senior Vice President here at GlobalPro, where we are your insurance coverage expert before, during, and after any loss or damage. Just as a quick intro today, there's been several articles that have come out over the past couple of days, really over the past week, regarding some of the changes, some of the increases in premiums, and some of the language that's changing in the policy provisions for insurance. Today, I'm going to bring on our president in GlobalPro Texas, Rob Bowlby, to discuss just that. What we're referring to is an article that we'll actually also paste a link to at the bottom of this video, so please check that out. It's a Wall Street Journal article, and what we're going to talk about today is something that we've been actually discussing and trying to alert insureds out there about, which is, it's been about 3 years now, really the last 2.5, where we've seen this phenomena. We'll call it shrinkflation, call it whatever you want. Premiums are on the rise, sometimes 2 and 3 times more than where they were a year ago, 2 years ago, and you're getting less and less coverage. These policies are built on sublimits now, and with ever increasing deductibles on top of that. We learned a lot after Hurricane Ian and Nicole in 2022 about how devastating it could be to some insureds and policyholders, especially in the community association world. So without further ado, let me introduce the man, the myth, the legend from Dallas, Texas, Mr. Rob Bowlby. Welcome.
Good morning, Matt.
Good morning. I think we'll get you on the screen. There we go. How are you?
There we go. Good morning.
There we go.
So good morning from hot and sunny Texas. We are on, I think, our 22nd day of 100+ degree temperatures and no rain in sight. But it has been a really interesting summer. One, there's been no hail since June, which usually we see a lot of hail in Dallas, but we've had neither rain nor any kind of temperature inflection. It's just been hot. And the flip side of that, thankfully, usually when we get a really long dry spell like this, we start seeing a lot of wildfires throughout the state. And so far, that hasn't happened. But it's still hot. Check the weather this morning. We've got 100 degrees plus between 105 and 107 for the next 7 days. So we'll just continue to hang in there.
So your temperature is actually 105, 102. It's actually that hot?
Yeah, 105 today. It's been consistently 105. Our highest this month has been 100. I guess last month, 107 was our highest day last month, but we're kind of consistently 105 every day.
Wow. Yeah, here it's in the 90s. It's in the 90s here, but it's always 92 degrees, but feels like 107. There's always the heat index on top of that, humidity and all that, as you know. So.
Yeah. Your Jersey Shore blood would not do as well here in Texas right now, my friend. But yeah, you alluded to it in the opening. And so first of all, here at GlobalPro, we read a lot of insurance stuff. I know that Matt, Dan, and myself, we've talked about a lot of articles over the years. And we read some of the real wonky stuff, the specialty industry articles relative to insurance, specialty business magazines. But this was front and center, front page of the Monday edition of the Wall Street Journal. So something for more mass consumption. Homeowners are now charging more and covering less, something we've already known, always known here at GlobalPro, but this really kind of brought it to the forefront and actually gave a few facts that I was kind of vaguely aware of, but really kind of helped put things in context. So with the last 6 years, according to the article, all of the major insurers have lost money due to the natural disasters, which that's pretty believable. Because of the amount of disasters we've had. We've had wildfires in California. We've had hurricanes in Florida. We've had some massive tornadoes and other storms in Texas. Those are kind of the 3 big states along with Louisiana. So it is very believable. What they don't mention in that article is, and I remember this from living in Miami from 2009 to 2016, there were no hurricanes. And during that 7-year period, insurance companies were making money hand over fist. Yeah. And that's when they started, when you have all that money, you got to do something with it. You buy back stock, you distribute it to shareholders, you make other kind of non-insurance related acquisitions with it, instead of banking it for future losses. And so now we started, and I believe 2016 was when the hurricane started ramping up. And so, there's really no other way to do it other than pull one of 2 levers. Either you increase premiums or you reduce amounts of coverage, and what we're seeing is both. And so there's a map in that article. I know we're going to send out the link to it, but the 2 states we're most interested in, Florida had a 10 to 15% increase this year in premiums. Texas, 20 to 30%. And so I know when Matt and I are calling on business owners for the first time and telling them about why you should have representation when you file an insurance claim, they always say, well, but I heard if I if I file my claim and my claim's too big, my premium's going to go up. Well, this article right here says, sir or madam, your premium's going to go up no matter what. Premiums are projected 20 to 30% this year in Texas, 10 to 15% in Florida. Interestingly, only 2 to 3% in California, but that's regulatory driven. They won't let the insurance premiums go up a whole lot higher there. And because of that, State Farm and Allstate, two of the largest insurers in the country, have now completely pulled out of California in the homeowner business. Wow. And Matt, I know you're seeing some of that in Florida as well. I think Farmers comes to mind. They recently stopped writing homeowners insurance in Florida, but what are some of the other ones that have pulled out of Florida? Or tell me some of kind of what you're seeing from a being willingness to either enter or in some cases exit the market.
Yeah, interesting. Actually, Farmers is an interesting point here because in Georgia, right next door, they actually have been forced to stop their plan to discontinue providing coverage and policies in Georgia. So, Florida has similar laws, and one of the things I think that is important here, which we haven't seen Petronas and the governor, really jump on. They've made comments, of course, in the press, but they haven't jumped on it yet. Which is, if you're going to sell auto, you have to sell home, residential and homeowners insurance here in the state of Florida. So what's interesting is that, we have an example right next door. Literally right next door, where they are forcing the insurer to stop trying to exit the market and making them, comply with the obligations, from a statutory standpoint and contractual standpoint. So interesting. This comes on right at the kind of beginning of the bulk of storm season. So to kind of piggyback off of what you were saying, a lot of the renewals have already started to happen. We talked earlier in the year to our associations. After June 1st, it's going to be very, very tough. Now we're in August, and from August 1st until the end of basically, September, October, into November, the end of storm season, this is the bulk of when the storms hit. So 91% of the storms usually come around now. So most of the associations, my point is that most of the associations have already gone through their renewal in the first half of the year. Some are going through them right now. And again, amendment changes, to legislation kicking in once renewal happens. We're seeing this here. I think shrinkflation is the word I used before. And I think shrinkflation is something that you'll see, from our financial backgrounds, you'll see throughout the economy, right? Even something as simple as going to buy a bag of chips, and all of a sudden it's half the chips, but it's the same price, right? Usually that's how it starts. And then eventually, sales drop, and they have to start putting more, their higher volume back into the bag of chips, but then they start increasing the price. So I think right now, the example I'm giving, I think right now, from an insurance standpoint, we're well into the end of the shrinkflation cycle. Premiums are at all-time highs. Deductibles are at all-time highs. They got approved in Florida this year that hurricane deductibles can get up to 10% of the TIV, which is totally crazy. At that point, you're basically self-insuring as an association, which is not allowed in the state of Florida. So, we're seeing it all over. And then again, on top of that, the sublimits are lower. The coverages are harder to come by. We're seeing, again, no help from the legislative body here in Florida, unfortunately. We have. I talked about it last time. We have SB 7052, which is the Insurer Accountability Bill, but I don't know if that's going to address the pricing issues that we have.
Well, and so you touched on deductibles there for a second, and I know you touched on it from an association standpoint, but it's interesting. We see a lot of both residential and commercial policies in Texas, and I will say a high percentage of the residential policies in Texas have a wind deductible that is equal to the general deductible. So if you got a $2,500 deductible, you got a $2,500 wind deductible. Yeah. I don't think that's the case in Florida, and I think that's one of the ways they're trying to improve profitability. You spoke to associations, getting as high as 10%. What are you seeing on the homeowner side as far as the wind deductibles?
They're creeping up there 2%, 3%, and 5%, sometimes higher than that. But it's creeping up. Most importantly, I think the approval from the state superintendent, the approval for the insurers to now be able to charge up to 10% is really the biggest issue at this point. What would stop a carrier from increase? Why wouldn't they want a 10% of TIV deductible for hurricane, for wind, right? It makes no sense. Of course, they all want to be more profitable. They have to report quarterly earnings, and typically in the old days they were high double digits, 18, 19, 20%. Now they've floated down to about 10, 11, 12% on a good quarter. And, that doesn't work for shareholders most of the time when they're used to getting almost double that, right? So, it's an interesting situation. The profitability aspect of it is one part. The reinsurance rates are the other. I mean, that's another way that we're really having a hard time here in Florida and across the country. Really, it's the cost of reinsurance. But then when you look at that market, those reinsurers aren't having the issues. Maybe because they've mitigated their risk a little bit more and spread it around. But they're not actually having any issues. An article that came out last week actually said that they're having a great time. For just paraphrasing what the article basically said. But they're doing okay. So there is some disconnect. There is a especially here in Florida, there's a massive problem if we have a major storm and a lot of the renewals that went out. Probably in the last 2 months to the next, the last 2 months going forward, and a lot of these associations are going to be hit with a 10% hurricane deductible. We're talking millions and millions of dollars that essentially, lead to self-insurance. I don't know what the result is going to be, and frankly, it's a circular argument at that point, right? We pay all this money in premium, then we have to pay all this money and participate in the loss and damage, and then we still don't get a payment from the insurance company. So again, what are we paying for, right?
Yep. So a couple other things the article mentioned that I thought were really interesting. One was the use of drones, and I won't say the carrier, but there was an article recently about a gentleman who had his insurance with one of the major companies. He was a residential homeowner, and he just got a notice that said his property had been inspected, and there was just a bunch of trash in his yard, and it just didn't look like he was maintaining the property well, and so they canceled the policy. Wow. And he called the carrier, and he said, "Well, this can't be right. I never had an inspection." And they were like, "Yeah, we just flew a drone over." Wow. And so they flew a drone over the guy's house, looked at the condition of the house and the yard, and decided to cancel the policy. And so the article talks about the use of drones for maintaining coverage. It also talks about roof coverage, which is something we are starting to see in Texas. So we're starting to see more and more of what I call roof matrices. They're usually the last endorsement on the policy that says, if your roof is this old, that's one column is the age of the roof. The second column is the material the roof's made out of. And you kind of find those two numbers in the grid, and that's how much your roof's going to be paid for. And if it's a 15-year-old roof and it's made out of, asphalt shingles, you're probably getting 30%. If you have $100,000 worth of damage to your roof, you're probably going to get $30,000 for that, or $10,000 damage to your roof, you're going to get $3,000 for that. So you're seeing more and more of those things.
The best part about that, right? Does that reflect in the premium price? Do you get a discount? They know the age of the roof when they insure the property, right? So if they know that they're only going to pay 30% of the roof,
not enough.
If they have a full replacement situation, is there a discount on the premium? I highly doubt it, right? Never. It's never going to happen. It's never going to be reflected in the premium. Yeah. So it's a circular argument here at this point with these carriers. So
no, but I do always chuckle when I see the claim-free discount on the front of the declarations. It's like $30. Yeah. It's like you haven't filed any claims. Here's $30.
You've been a good driver. You've been a good driver. You've been a good homeowner. Thank you.
The other thing with roofs, we're also seeing some just go straight to ACV coverage on the roof. So there's no matrix, but they only agree to insure the roof at actual cash value instead of replacement cost value. Yeah. And then the article didn't mention this, but we're starting to come across it more, and it's going to lead me into another point. We're starting to see anti-matching language in policies, where the policy will specifically say, like, we will not pay to repair undamaged property solely to obsolescence, or they don't use the term matching, but say obsolescence or discoloration that doesn't match the new product. And it basically just says, if part of your floor is damaged, we'll replace part of that floor, but we're not going to replace undamaged floor just because it doesn't match, which has been a historical, that really restores you to pre-loss condition. If you repair your floor in the middle of the house, it doesn't look like the rest of the house. So then you've got a house that's lost value from a aesthetic standpoint.
So Florida,
I actually saw that in a policy recently.
That's really interesting. In Florida, it's the total opposite. There is a section dedicated to that in the statute. Where it is provided. It's not the matching. You mentioned it before. It's not the matching, right? It's the pre-loss conditions, right? You have to replace it with like, kind, and quality, or repair it, depending on the policy, obviously. But you can't put something that's totally different, because that is not ever, and it's never going to be pre-loss conditions, right?
Right.
Regardless of the age or the depreciation that needs to be applied or anything like that, ultimately, what were the pre-loss conditions, and how does the insured, how do they receive a full indemnification? That's the intent of the contract policy. It's interesting they put that in writing, and there's language there that goes out. Now, here in Florida, it's only addressed for homeowners or residential, not condo association or commercial paper. But the interesting thing is, again, it's not a matching argument, right? You can't. The intent of the insurance policy is always to put the property or the insured, whatever the insurer, whatever's insured, wherever the property is, back to pre-loss conditions. That's the intent. So you can write whatever you want in the policy provisions and explain it another way. However, that's the intent at the end of the day. And we get that a lot, especially after Hurricane Ian, where carriers, they want to replace 70 tiles of a 500 tile roof, and they say, oh, but this tile's discontinued. Like, how are you going to do that? Oh, we have a place in Arizona. We'll go to the boneyard. We'll pick them out, and we'll sand them, and we'll paint them to match the color. That is not what was there before, obviously, right? And to go to Arizona to pick it out of a boneyard and replace it, again, that's not the intent of the contract policy. So it's not the matching, it's the pre-loss conditions, it's the indemnification clause there. So, or doctrine, I should say. So it's interesting that Texas took that stance.
Yeah, and we haven't seen, I've seen it in one policy so far, so it's relatively new. We'll see if it tends to proliferate throughout the rest of the industry in Texas. But, the point I wanted to bring up here is, so some of the things we've talked about, like increased deductibles, that's something you're going to, if you have a half decent agent, at least they're going to bring up, hey, this is your deductible when you're signing up for this insurance. Yeah. Maybe the roofing thing, maybe they're like, hey, we're not going to cover the entire roof. If you have roof damage, you're going to be subject to either ACV or this matrix. Maybe. I don't know. A lot of agents really get into the weeds that far. This last point we just talked about, the anti-matching language, that's never disclosed when you're signing up for insurance. And I heard somebody bring this up on a call the other day, where they said, why is it when I buy insurance, I can't see the policy? I can't see my actual policy until days or actually weeks after I've purchased it. Like, the insurance agent can't sit down with you and say, this is exactly what your policy says. They can give you a sample. They can say, here's what our sample policy looks like. But until you've actually purchased the policy, and then, at some point in the future, you get the policy, and most people never read it. And that's where you really, we call it ready, recover, rebuild. That's the ready stage. And so what we encourage our commercial owners and our residential homeowners to do is, within 30 days, read that policy. And if there's language you're not happy with in there, you can cancel within that 30-day period.
So for Florida associations, it takes about, and it's probably true for most of the country, but it's about 45 days until you actually can see the full policy. But I think the two most important things you mentioned before, one, that means someone at the association, the board, the property manager, has to be on top of that and has to actually request the policy. We say that all the time in all of the discussions we have, pre-storm season, even now. I mean, I would tell every association, I say it a lot, I sound like a broken record, but you're allowed in the state of Florida to request and receive one certified copy of the policy every year. It should be done on renewal. And even if it takes 30 to 45 days, okay, but try to get the certified copy of the policy as quickly as possible, whether you're an association or homeowner, just in general. Interesting, you also mentioned that they can give you a sample, right? So these are all ISO forms for the most part, unless it's completely manuscript. It's going to be that policy for the most part, right? So it's interesting that they say, but here's a sample, but we can't give you your specific policy, which for me would kind of throw up a red flag. Well, what do you mean? But if you don't understand that it's ISO forms that are approved by the state, that if any change occurs, has to be basically explained and then requested to the superintendent, along with premiums and things like that. They can't give you your policy, but they can give you a sample, which essentially should be the same thing, right? It should be the exact same thing. Now, some forms here and there may be different. You may have elected certain deductibles or things like that. Okay, but that's what the deck page is for, right? And they should be able to give you the deck page, once they bind, the policy. The fact they can't give you the policy is mind-boggling to me, but it happens.
It happens, I would say, 80, 90% of the time.
Yeah.
I've rarely. I can tell you the number of claims we've had where the insured or the agent can produce the policy within 24 hours, very close to zero.
Look, you know exactly. So I mean, we have claims where on every claim, our LOR goes out. We request a certified copy of the policy. I would say most often, more often than not, we never receive it. We have to follow up several times to get it. And asking asking the agent who you think would be the right person, the right source, the right resource to go to when you need any of the information regarding the policy. Asking the agent typically doesn't, it takes just as long. So we might as well just keep going direct to the carrier because, as the advocate for the association, we're representing them. We have the right to ask for those documents, and it's unbelievable. It's the most important part of the entire, relationship between the insured and the carrier, and they always seem to take forever to get them. I mean, let me put it this way: the state-backed insurer for Citizens, we've asked 4 times. Actually 5, I should say, with the LOR. They sent us a certified copy of the policy after 3 or 4 requests. It took them almost 7 months. The state-backed insurer, or the state of Florida, almost 7 months to provide us a copy of the certified policy. Totally ridiculous. I mean, that makes, again, no sense, but that's how it is, unfortunately.
Yep, agreed. Well, so that's all I had for today. I mean, I think this was just a really timely article. Obviously, it points to the need for representation. Yep. It's just you shouldn't go it alone on an insurance claim. I mean, their carriers are kind of counting on you not having representation. They'll get somebody out there quick, get you a number quick, and hope that's the end of it.
Great point to kind of wrap everything up. Yeah, I think now more than ever, it is even more. We talk about our slogan, right? We manage your risk to recovery. We manage risk to recovery. It is even more treacherous, I should say. Maybe that's a good, alarming sounding word. It's more treacherous today to try to navigate, an insurance claim, especially when it's for a condo association or business owner or homeowner. The interesting thing I think that I'll leave the conversation with here is that in Florida. We're actually seeing this anti-PA form. I don't know do they have that in Texas yet? I'm not sure if it's made its way over there, but we're starting to see these forms that literally say you are not allowed to have representation. In Florida specifically, these forms are saying anti-public adjuster, again, which I don't think gets explained to the insured when they go to sign the documents. Right. So I don't know if that's happened in Texas yet, but it's interesting that now when it's as hard as ever to get coverage, as hard as ever to get over some of the participation hurdles, the deductibles and things like that, as hard as ever to pay the ever-increasing premiums, they're also putting language in there and forms approved by the state of Florida, right, that say they're not allowed to get representation. Again, mind-boggling, but we're dealing with it.
The surplus lines carriers have tried that in Texas. So far, Tapia has been on top of that and has lobbied the legislation. And so I think there was 2 bills that Tapia got passed this year. One was that arbitration has to stay in Texas, which was a big win.
I think you were lobbying.
But I believe the second.
You were responsible for that, weren't you? Weren't you over there?
I lobbied. I went and helped lobby for that. And the other one, I believe, was representation, that you can't reduce premium in exchange for agreeing not to get any kind of representation.
And the best part is, right? How much of a premium reduction was it? Was it $30?
Probably not $30.
We can give you only today, we'll offer you another $30 reduction if you ensure that you'll never get representation. So, all right.
Well, as always, thanks for having us on. It's good to be with you, Matt. We'll try to stay cool here in Texas.
Stay cool. Use the pool. Use the pool. I hope the kids are catching fish and using the pool and running around in the sprinklers like I saw. But thank you very much, Rob. Great to hear from you. Great to talk. That about wraps up the show today. Again, if your association, your business, your private residence, if your family office and your assets suffer loss or damage, we always say, call us first. It's harder now more than ever to navigate and ensure that you are fully recovering from any loss or damage. That's what we do here at GlobalPro, right? I mention it all the time. We are your insurance coverage experts before, during, and after any loss or damage, and we manage your risks to recovery. If you'd like to talk to one of our insurance coverage experts today, you can always call us, 855-487-7475, or email us at recover@globalpro.com. I mentioned it earlier. The article that we were discussing and referring to today on the show actually will be, we'll put a link in the bottom of the video here. You can also find it on the globalpro.com/GP links page. Or on our blog, on our website, GlobalPro.com. But we're going to disseminate that information. It's a must-read, and I want to wish everyone a good luck for the next couple of months here. This is the meat of storm season. But again, if you need us, we're here 24/7, 365. That's it for today's show. Thank you for joining us. We'll see you next week, same GlobalPro time, 11 a.m. Thursday, same GlobalPro channel. See you then. Thank you.